prefer to use Binance as the guinea pig or the first test case, and he's quite excited about it. So we're connecting our teams to do that. So roughly, we'll expect probably a couple of weeks. So this is the reason why we publish all of our cold wallet addresses, so that people can see our cold wallet addresses. So that's kind of the rough timeline we're looking at. A couple of weeks, short answer, but that's a longer version. Yeah.
Great. And then just to take that then to the next level, Binance specifically in the lull period before that full transparency is released, how safe is Binance right now? How can the users maintain their trust, and does Binance have any current liabilities?
So Binance, we ran a very simple business. We have not taken loans from other people. We have not taken VC investments. We especially have not taken VC investments and then give the money back to the VC through a loan or a swapping or a reverse investment. And we just have never done that. We don't have loans. We don't have debt. We don't owe anybody any money. We don't owe anybody any money. No one gave us loans. We also did not give loans out of the platform. So we never take user assets and give it to a third party to manage and try to make yields, etc. We do a couple of things. We have a margin program where users' savings products are used to provide lending for the margin traders. But the margin traders cannot withdraw that money away. And our system does all the risk. Funds never leave our platform. We do a bit of DeFi staking, but we only interact with a smart contract protocol. And we do that in a fairly limited basis. So we don't have funds that we give to another third-party fund manager, and we rely on them to perform well and not run away. Lastly, many small exchanges rely on either each other or Binance for liquidity. So that means they have to make a deposit on Binance, and then so they in their account they will typically have millions of dollars or hundreds of millions of dollars on Binance or at another exchange to sort of share liquidity. Binance, because we're the largest liquidity pool on the planet, we don't use other smaller exchanges for liquidity. So all of the user funds, all of our funds stay on our platform. We don't use other platforms for to borrow the liquidity. So from all of those aspects, our funds stay on our platform, and we publish the address. It's transparent. Nothing's risk-free, right? So crypto exchanges are inherently quite risky businesses. You have to run them well. You have to do security well. You have to do a number of things well. But we're self-contained. We don't owe any other people other money. So we're very clean, very simple business. We also do not do futures trading ourselves. We don't have a quant trading firm. So we are not trying to make money from trading ourselves. We're not trying to be a quant shop or like a hedge fund shop. We make money through trading fees. Lastly, we do have market makers. We rely very heavily on third-party market makers that provides liquidity. There is one market maker which I'm an investor and shareholder of, and I make sure that that liquidity provider does not make profits. So we try to make it not lose money, so they just provide liquidity in the market. They're not profit-driven. So we run a very simple exchange business. Yeah.
Okay, great. And then just one final question along these lines. So as you know, we released links to a bunch of our internal wallets for some increased transparency this week ahead of proof of reserves. And there was a report from a blockchain analytics firm that dug into the details a little bit there. And we had a question around some of the percentages of the holdings that were shown in those wallets. So what's your take on, is it too risky for Binance to be holding a big percentage of BUSD and BNB in its reserves?
No. The short answer is no. BUSD is the most fiat-backed stablecoin. It's audited by NYDFS. It's not issued by Binance. It's issued by Paxos. Two very separate companies, two very separate management teams. They started way before Binance. Paxos used to be Itbit. I think the Paxos founder, Rich Teal, we're actually both in Indonesia for this conference. And BUSD is the most fiat-backed stablecoin, and that's fully audited, and that's transparent. They publish their monthly holdings report, And whereas other stable coins use a lot more corporate bonds, corporate what do you call it? Well, stable coins. BUSD is the simplest stable coin. It's fiat backed. It's very transparent. It's not a large portion on our exchange. If you look at total asset value, BNB is even smaller percentage. On exchange today, in a bear market, if their assets do not include a large percentage of stable coins, that is a risky sign. There's usually something missing. That's actually usually a warning sign. Not to say it's guaranteed a problem. Maybe they haven't released it yet, but that's something that people should look into. So I believe that our proportions are actually very, very healthy.
Okay, perfect. And then just two quick, slightly more positive questions before we open the floor to the rest of the community here. So, CZ, today you put out an announcement about an industry recovery fund. So perhaps you could expand on that a little bit, maybe give some insight into how that could help projects thrive, or what criteria we might be using to help assess that.
Sure. So I think, well, given the events that transpired in the last week or so, there will be quite a number of good projects. They basically didn't do much wrong. They were building their products. They may have their funds on a exchange that went down, or they may be invested, etc. For various number of reasons, they may be negatively affected. But otherwise, other than the sort of a liquidity short of money in the short term, there are good projects, good products, good community, etc., good team. We want to help those projects to survive this turmoil. So the best way to provide to help them is to help them through this liquidity crisis, basically giving them money or investments, etc. We actually think that this is a pretty good time to do it because most of these projects' valuations are much more reasonable than they were a year ago. So yeah, this is not to be very honest. This idea didn't come from me. It come from one of our co-founders, and we said let's embrace it. And we're still figuring out the details. But we want to look at more projects. We want to, especially projects that are in need of help. And also, after I put out that that tweet, 4 or 5 other funds actually reached out to us saying they also want to help. A few projects reach out to us as well, so we'll be going through that. So I think basically now there are a few players in the industry who still have a very healthy cash reserve. Binance is one of them, and we want to help the projects, the strong projects, the good projects that need cash to survive this crunch. And then the project that survived this difficult time is actually going to be much stronger later on. So I think as negatively as things look right now, we actually think this is a very good cleansing period, and the weak project's gone. The industry is actually much healthier, even though it's extremely painful during this period. But we want to invest in strong projects right now.
Okay, that's clear. Thanks, CZ. Okay, so just one question left before I do that. I'm going to start bringing people onto the stage. So just a reminder, please try and keep your questions as quick as possible. Just remain muted until I call on you, and then you can ask your question from there. So CZ, final question from me. What's your suggestion to the average crypto user? How should they act? How should they think in a market like this at the moment?
So I got to be very careful here, giving what to do, because everyone's situation is a little bit different. But basically, you should not invest in crypto if you're using money that you need for next week or next month. You should only be using discretionary cash that you don't need for a long time, like maybe a couple of years. And if you're doing that, if you don't know what's going on, just hold. A couple of years later, all of this will blow away. People may or may not even remember this. That would be the overriding sort of general simple principle. If you don't know what's going on, don't try to guess what's going to happen, sell here, buy there. Right now, during the next little while, it's going to be highly volatile. A lot of different news may come out. Some of them will be very positive. Some of them will be very negative. It's very hard to predict. So we will go through a period of high volatility. and higher unpredictableness. So yeah, so unless you're very experienced, very mature, very confident, and can handle the risk, I would recommend most people to just hold for this period of time. Yeah, that's pretty much it, really. Yeah.
Okay, great. So onto the community questions then. So first up, we have Anthony.
Morning, CZ. You had mentioned that Binance doesn't have any debts or any loans that have been made, but I'm just curious on this contagion effect that we're expecting. Is this going to be affecting any subsidiaries or any of the major investments that Binance has made in the most recent time?
I'm actually not too. That's a broader question. I'm actually not too sure. We haven't heard from our portfolio companies so far. We have not heard like big cries for help. Uh, I think the Binance ecosystem is much less, or BNB ecosystem is much less impacted. They're all much more closely aligned with the Binance ecosystem. So I haven't heard of anything, but we have invested in like 150 something portfolio companies. I don't know the state of all of them. Yeah. So I do know there will be some cascading contagion effects. There will be a few other players who either have money on FTX and a significant enough amount that it may cause them trouble. But in this type of situations, the first one to go down is usually the big one. The cascading effects become smaller and smaller. So if we look at like Luna UST, that was like 40 billion, 50 billion dollars of value that's being destroyed. The first order of cascading ones, Three Arrows, is like a four or $5 billion size fund. And then the third layers are the Celsius, Voyagers. They're like $500 million to $1 billion kind of, so $1 billion kind of range. So each time it cascades, it's more spread out and smaller. So and we also seen from the price that when Three Arrows happened, it was a big not Three Arrows. When Luna happened, it was a big drop. When Three Arrows happened, it was like, okay, yeah, this is a fallout effect from the other thing. So that's kind of how I view the potential contagion effects. There will be some, but I think the major impact is probably out. But don't quote me on that. I could be very wrong here, but I think that I mean the stuff that happened at FTX is extremely surprising to everyone. I mean, if I was writing a fiction, I couldn't imagine this stuff up, right? So I think that's really an outlier, and the rest are probably just what we call collateral damage because of that. The effects should be smaller. We'll see. Yeah.
All right. Thank you, Anthony, for the question. Next up is Dana. Dana, please go ahead.
Hi, I hope you can hear me. I'm having a bit of a communication issue. I wanted to know, are you guys going to reveal the data, the amount of withdrawals happening, let's say in the following days, as a lot of people are advising people to take out money out of Binance, out of everywhere, to see that the companies are stable and sustainable? Because at the end of the day, as I know, a lot of people are trading on Binance, and we do want to hold substantial amounts on the exchanges, but our trust is a bit broken. And I wanted to know if there's going to be transparency on the amount of funds being withdrawn over, the period ahead of us.
Okay, Dana, sorry about that. It seems like we've lost CZ. Give me a second.
Oh, sorry. I was on mute. Yeah. So sorry. Yeah. So we published our cold wallet addresses like a few days ago, and there's many third-party platforms that tracks those addresses and transfers on those addresses very carefully. I think there's been no news about significant withdrawals from those addresses in the past few days. and whereas there has been news about significant withdrawals from other exchanges who have disclosed their addresses. So I think you guys can see that on Binance, for us, it's business as usual. We do see a slight increase in withdrawals, but it's not